ChargePoint updated investors with some key insights from their latest quarter's progress. So in this video, I'm going to go over the business progress that ChargePoint made in its most recent quarter, provide you an overview in this brief video. So let's begin. So revenue was at the high end of what management was expecting in its most recent quarter. It came in at 130 million, and that represented a 59% year-over-year growth rate. Now, the company is growing rapidly, and there is a lot of room to continue. The EV installed base in North America and Europe are still in single digits. What does that mean? That means that overall, still less than 10% of all the cars on the road in North America and Europe are EVs. And considering government regulation, that looks like it's going to mandate EVs on the road more and more. That could grow to 40, 50, 60, 70, 80% over the next 2 decades. So ChargePoint has a long runway for growth here. Interestingly, they saw less growth in North American commercial and residential than we would have liked due to what we believe is a delay in discretionary purchases. Now, I will highlight that this is not exclusive to ChargePoint, this slowdown in discretionary spending. This is common among enterprises across the board, which are trying to cut down spending. You've heard a lot of layoffs, you've heard a lot of cost cutting. This is going on practically in every industry in the economy, I would say, except for travel. Travel industry is doing really well, so they're not really cutting back right now. But for the most part, many industries are cutting back on costs and layoffs because consumers are pulling back spending. There's fears of a recession, so companies are bracing themselves for that potential slowdown. ChargePoint, another company, highlighting that they experienced a slowdown as well due to these macroeconomic factors. Additionally, for the first time in ChargePoint's history, their European sales delivered over 20% of the company's revenue. Meanwhile, fleet billings more than doubled year over year. So that's nice that the company is growing in other areas outside of the North American consumer segment. That provides the company with more diversity, more diversification. That way, if there is a slowdown in North America, maybe the European economy does better, or vice versa, and thereby it balances out the company's revenue and gives it a lower risk profile overall. The company now provides access to approximately 745,000 EV ports in North America. 243,000 of these are under management by ChargePoint. The rest are third parties, and that was up from 225,000 in the previous quarter. So roughly 10% growth quarter over quarter in the total number of ports available. That's solid growth, especially during these macroeconomic challenges. To be able to grow at that rate, very solid indeed. And approximately 21,000 of the 243,000 on the ChargePoint network are DC fast charging, and that too was up from 19,000 from the previous quarter. So again, roughly 10% growth. And this is the area I think ChargePoint should focus on here, is increasing these fast charging stations. There's a huge difference between the time it takes to fill up gas in your car full tank and the time it takes to fill up your EV to full charge. In my opinion, that gap needs to close in order to increase adoption of EVs worldwide. All right, that's one of the main sticking points, is the time it takes to charge from consumer perspectives. If you make it faster, then more people will be interested in EVs because it won't take so long to charge. The company already counts 76% of Fortune 50 and 56% of Fortune 500 companies as their customers. And this reflects its excellent penetration given their land and expand strategy. This is something I've been following, is the number of customers that they get. And this is good news for ChargePoint investors because that's the key, right? If they land a customer, even if that customer only gets 4 charging ports or 5, whatever small number might be the case, but if it's a big company, that can expand further, right? They start with 5, then they might say, okay, these 5 are working well, they're attracting customers, they're getting used a lot. Let's expand that to 25, or let's expand it to 50. And then from there, they can expand to 500 or 100, whatever it might be. But just getting your foot in the door, establishing a relationship, makes it more likely that when that client needs more charging stations, they will pick you as the provider instead of going out and looking for somebody else. All right, but that's all I've got for this video highlighting what's going on with ChargePoint stock. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.